Hey everybody, sorry about being a couple minutes late there. Problems happen when computers reboot. Stupid Windows updates, you know? All right. Morning. How's everybody doing? Good? All right. Hey Goose, hey Kimberly, hey John, hey Al, hey Valerie. Whew, what a week it's been, right? Morning, Greg. Man, oh man. Let's go ahead and jump over to the disclaimer. All trading involves a substantial risk of loss. Remember, I may be a complete idiot and not know what I'm talking about. So past performance is not necessarily indicative of any kind of future results. This presentation here, informational, educational, and fun, is not recommended a recommendation for any kind of financial advice or to buy or sell any financial instruments. If you need that personal financial advice, you got to hire and consult a financial advisor. All right. Hey, Maureen. Good morning. So, anyway, I am behind on getting everything done. Let's see. Market Chameleon, you going to load up for me? Yeah, there we go. Let's grab a couple of these. So, this right here, Market Chameleon pre-market tab. I can throw this over into, if you're interested, I have these all pinned in Discord. So, if you're in Discord, you can grab them. But here, I'll throw this in the chat. There it goes. Should pop up any second. It said it sent it. Maybe. I don't know. I'll try again if it doesn't. There it goes. All right. So here's the link. We're just going to pop over here. I like to change this to the biggest movers like Adobe. Look at that. Adobe, MSTR, SIG. So then I just pop over here. Add them to my list. I can't even remember. I read those off so fast. MSTR. That's a Bitcoin play. MicroStrategy. Let's just look at a couple of these. So, Adobe on earnings. Nice, making money. Surprising. Probably had a fair outlook. Yeah, nice pop. Doesn't really move pre-market much, but today, ramp it up. Looks like it may come right back down to. And it's stuck below the roadmap line, so be careful on this one. We gotta, like, that's a downtrend. Yeah, swing high. So it's a swing low, a swing high, lowest low and highest high in a move. And then this is a swing low, little mini swing high, swing low, swing high, swing low, swing high, swing low. Bigger move, swing high, lower than this high. And bigger retrace, it's making lower lows than these. So this becomes a more important swing. We're going to have to break out above 401 at the minimum. Why? Well, that's that high right there, and it is a lower high than this high right back here. Do a little education this morning. See how we stopped at the roadmap line? Right there. Stopped at the roadmap line, even though it poked through, right back below. Find a resistance here, even in the pre-market. Be careful on this one. It can continue the trend down. This is a daily trend. We peaked back here in November of 21 when Big Tech pretty much made its high. The NASDAQ made its high, and it's been a downhill go for Adobe ever since. All right. That's how I look at this stuff. Now, if you wanted the roadmap line, it's like $5. You can get it in Discord, and you get the roadmap line all for $5, and it's in the description if you're interested. And you know what? If you want to come be a part of these live streams every day, make sure you're a subscriber and hit the bell with the little doodads. That'll get you notifications when I go live. I was late for just a minute this morning, so sorry about that. Hey, Pat. Yeah. Cool. Yeah, we'll get that email out with the invites and everything here soon. We had that on the list to work on today. Kimberly's helping me with that, so I don't think she'll be a part of the meetings, but she was helping me put it all together since it was something a side project, giving out a win for everybody. All right, Sig looks like a jeweler, getting a little pop here. Nice. Let's just circle back around and talk about all the other things here too. So. Start where I usually start. S5FI, stocks about the 50-day moving average yesterday. getting a little pullback, hanging out below that 20. The longer it hangs out down here, the more power it's going to have when it rips the other way. And be careful. I was sharing in Discord yesterday let's just pop this up and grab the chart I want to show. Running behind with that stupid reboot. Sorry, everybody. I apologize for burning your time here. Roll back up and get my seasonality charts that are in. There we go. Let's talk about this one, and I need the S&P 500 one. Here we go. So just grab these out of my library. So here's S&P 500 seasonality. You see mid-March, we're usually negative for the year. This is 20 years of data right here. Time frame is what it does is it takes the daily movement, aggregates it, and then puts it into this, and it's just a percent basis up or down. So usually we see a negative move for the year right here in March. And what that causes is it causes a volatility spike right here. And we're kind of like right here. So if we can survive this week, the market may start rallying for the year. This is the time you don't want to miss, all right? Like this right here. Look at that. That's like a 3.5% move for the year. And then it goes sideways, sell in May, go away. Sideways out to, say, mid-July. And then we start creeping up. Go sideways in August. Creeping up again, pull back in October, and then rip into the end of the year. This is just the historical 20-year average, how the market cycle goes, all right? It's been fairly reliable so far this year. I mean, this is, right here's where we are, right? Right here's where we are. We went on a rip, and then we came right back. So everything's just kind of following along the normal pattern of the market. It feels like something's different this year. You know, something's different every year. So just keep it in mind as we move forward that even though it seems like the world's about to come apart at the seams, excuse me, the whole banking industry is about to blow up, whatever, things might turn around here as we move into April, May. You know, sell in May, go away, that's a real thing. Everybody kind of believes it, so it chills out through May and June and into July, and we just kind of get sideways chop. So, all right. YouTube does not always send out notifications, Dan. I'm sorry. I don't control YouTube notifications. In fact, they even have, if I were to pull up the administration dashboard thing that they give me, they're like, sorry, we don't deliver notifications to everybody who has all notifications turned on for your channel. What? Isn't that what you want? I mean, when you click that button? Whatever. Yeah, hey, welcome to the computer-controlled society where AI decides what we want. So, all right. ES, just kind of chopping. We're having trouble getting back into this orange box. A little bit of trouble. We need to get, this may indicate that we just pop right on up through it. So be prepared. Like thinking about the seasonality. Now, there is still risk. If we start breaking down below 3,800, that's a risk in the market. Like I'm not dismissing the fact that I have this orange zone right down here at 3,800. If we break it down below it, then we can see a lower low. All right. Don't discount that fact. Like that's where I've got tons of alerts and tons of everything set up. Beth, if she's on here, I don't see her this morning, but she's in the Discord chatting all the time. She's very concerned about breaking lower than 3,800. So that's my line in the sand right there. Lower than the December lows. As long as we're above that, I mean, this simple chart, just sometimes the candles get too much information out there. I turned it down to this simple chart because, I mean, look, high, 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 little high, and then broke up through, came back, test, and we're on the upside. We're above this line. We're on the upper side. that can lead us higher, especially if the seasonality plays out late March into April, possibly into May. Then we may chug in this 4,300 zone, consolidate through July. I mean, we may see a spike, we may see a dip, and be like frustrating everybody. Oh my gosh, we didn't go anywhere for May, June, July. And then all of a sudden we start drifting a little higher and we run into the end of the year possibly. That's just looking at seasonality. Now, does it have to do that? No. The whole banking industry could burn down. Remember, we got the FOMC coming up next week. Looking at our calendar here, we had this needs to be refreshed. I don't know why I didn't pull new data when I loaded it, but unemployment claims today, right there, and it turned red today, 192. That was less than they were expecting. Interesting. The Philly Fed, minus 23. Building permits, up. Housing starts, up. Import prices, down a little bit. Everything's looking pretty rosy there. These numbers are baked, though. Like, I'm not even going to, the way they calculate these, and if you look at the, the household survey that also comes out, we're missing a bunch of, people are taking 2 and 3 jobs instead of just going out and, holding one job. People are having several W-2 jobs, taking part-time jobs, losing their full-time job and taking a couple part-time jobs. So they're kind of playing with these numbers right here to make the economy look stronger than it might actually be. Now, the economy is not the stock market, so the stock market can lead out of this whole big mess here. All right, looking at tomorrow, we have just a few numbers coming in here. Down here at 10 a.m., we've got the UOM consumer sentiment. Right here, University of Michigan. And just, are you happy to buy stuff? Or are you not happy to buy stuff? Consumer sentiment, right? We'll get a read on that tomorrow at 10 a.m. And we'll see. But next week, I got to warn about this. On Tuesday, we start the FOMC meeting. And on Wednesday, we do the announcement at 2 p.m. right here. This is a big potential market mover right there. So we'll see what happens next week on Wednesday. Remember, this I was talking about these interest rates, right? The target rate that we set last time in February, February 1st or whatever it was, the last FOMC meeting, we got right into that target rate. That's the orange line is the Fed funds rate. If you're unfamiliar with this chart, this is the DGS2, which is the 2-year Treasury constant maturity rate, which is the real market interest rate that everybody uses. That's where this is the rate that everybody picks up and uses for mortgages and all that stuff. So that's why it seems like the mortgage rate never matches the Fed funds rate. Well, it's because we're using the 2-year Treasury rate and using that as the base, and then they put their little profit modifier on it, and then the reason all the banks have different rates is because they want to make different amounts of money, and everybody's competing with each other, and depending on your credit rating, blah 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 blah. I could go into that for an hour, but the market rate's pulling back, and the Fed rate is above that. Now, if we see a significant pullback further, then the Fed is gonna have to cut their rate. They're not gonna, it's dangerous to stay above the market rate for them. I mean, it's happened. We've seen it happen before. Now, usually they're holding sideways as we get into, they're holding sideways as the market rate pulls back, and then all of a sudden they're like, "Oh crap, the market's coming apart. We gotta cut rates." I mean, it happens over and over and over in the history. So you think the Fed is setting the rate? They're not setting the rate. I sound like a broken record for those that come all the time, but it's kind of the truth. So keep an eye on this one. If this is not one that you pull up and check at least weekly, I recommend you do it. And it's just Delta Golf Sierra 2, DGS2, and then you click this little button on TradingView. And TradingView is free. You can open a free TradingView account put this on a tab, and like if that's the only thing you use it for, just come check on it once a week. Just bookmark the tab or whatever. And then you just click on this little plus guy right here, add FED, FUNDS, Fed Funds, and it puts the orange line on the chart. So, and they can't really fudge these numbers. This comes out of the market right here. Now, whatever the 2-year Treasury constant maturity rate, and that comes right off of, what do they call it, Fed Deposit Now, or whatever their stupid site is where you can just go buy bonds. You can buy 2-year treasuries. So, yeah, they can't bake that number. And the Fed funds rate is the Fed funds rate. I mean, that's what their overnight lending is. You know, so they play with these numbers, and yeah, Treasury Direct. That's it. Yeah. There you go, Treasury Direct. So you can go to Treasury Direct, and I can pop it up really quick. I got too many things bouncing around my head this morning. Treasury Direct, right there. You can log in and buy your treasuries right here. They've got all their series bonds, and so the DGS2 just pulls the market rate for the 2-year treasury. And the market, it sets the rate basically every day. Those are like constant auctions going on for those 2-year treasuries. And then the FOMC only sets the rate every 6 weeks or so. And learned something new today about the interest rates. All right, moving on through. NQ, look at this. Look at ES price behavior compared to NQ. Now, the question came up in Discord yesterday. What do I expect as we roll into the new quarter? What kind of money flow? Well, typically, we'll start out with typical. Typically, you see money flow into financials because they announce earnings first. Now, they're not it's, when you look at it, it's not always first, but they're the first sector that tends to report earnings altogether in a new quarter. So money flows out of whatever it's been in at the end of the quarter and kind of flows into financials ahead of the earnings. And then it starts flowing out of financials before they actually start announcing earnings. And it flows into tech. And then it flows out of tech into all these other little nooks and crannies of the market as tech announces earnings. It's just a flow of money. Now, since financials are not a stable place to be putting money right now, we may not see money flow into financials. And usually I pull up this FAS chart and I'll zoom it out and show you that there's usually quarterly, every time you see one of these Ds, you see just a little pop. That's the money flowing into financials. It's not the big time thing, but every time we come on a new quarter, you get a little pop in this FAS. Now, right now, you can see we're on this giant drop-off in FAS, and this exasperates the move because it's 3 times leveraged. So every time we get in one of these new quarters, you can see right there, June. Getting a little pop into June. And then as it gets into that second week of June, it dropped. So money flows in as we get into that new quarter and then drops. So right now we're getting a drop as we head toward the new quarter. It starts in April. So money may just skip financials this time. So don't count on that this time. Now we may, it's possible that we see a little reprieve and then it continues dropping. So just that's one to keep an eye on because it does exasperate the move in financials. It may be a little tough to see at that scale, but like as we rolled into January, saw a little pop. Then that as they started announcing earnings, we got a pullback, and then financials pretty good. And then oh my gosh, what is happening? The world's ending. Everybody get your cash. So we see it over and over. Right back here, a little pop in the. We actually popped into June here, and right into the first week, and then dropped out. And then rock along, find September. Yeah, a little pop into September, and then avoid the financials as it rolls into other money. So it's not necessarily a trend. It's just it tends to be a few day little thing. Money flows into financials and then back out, flows over to tech. I don't have a fancy little tech thing to show you, but it'll typically flow into that, big tech, NASDAQ. Right now, it looks like possibly we're just skipping financials and heading right into tech. And this may continue right up through tech earnings sometime near the end of April. All right. Something interesting, right? Something different. Something I don't usually talk about. All right, Russell right here. This is where a lot of our small cap banks are, the smaller banks that, I was throwing in Discord yesterday a list of 2,124 banks minus the 3 that have gone under. That was just off the Federal Reserve website. But right here, we're hanging out near the bottom and pushing a little lower today, pre-market. It's completely opposite of what we're seeing in tech. And tech's trying to break out on the upper side here of this consolidation. Russell's hanging out down here, pushing the lows. And ES is just kind of hanging in the middle here, consolidating at the lows, but not pushing the lows. What's going to happen? This is kind of a coin flip zone right here. I'm hoping that this all resolves either up or down, and we see which way we're headed in the coming, for gosh sakes, I hope we don't make a lower low tomorrow, because that means we'll probably see continuation lower on Monday. Now, tomorrow is what they call a triple witching. It's the end of the month, end of the week, end of the month, end of the quarter for options. You may be, it's not the end of the month. Well, for monthly options, which are the options that have existed forever, they expire on the third Friday of the month. So the monthly, the quarterly, the weekly, all expires on Friday. And we've been running on these quarterly expirations. We've been running like $1 trillion worth of options that expire on those quarterly chunks. So there could be a bunch of gamma and stuff, a bunch of pressure come off of the options market, free it up a little bit after tomorrow's expiration. That may free us up to make a big pop on the FOMC next week. I don't know. We'll see. We may just cover and chop sideways tomorrow, Monday, Tuesday, first part of Wednesday, and then we get our direction. So just be prepared for that. It may be kind of a dull, frustrating trading segment for the next few days. Dollar continuing to just chug in the support resistance band. Our top's up here, our bottom's down here. If we break out above here, we're going up. If we break out down here, we're going down. Right now, just going sideways. FAZ getting working its way a little higher, a little higher. This banking crisis is not over. Be careful. Looks like the market is open now. So I'll probably lay off my rant here. Bitcoin holding the highs here. Next leg. Watch out. This thing can go. My target's up here. My ideal target up here around 30 to 34. Minimum target probably 29,000-ish. All right. Adobe. We went through that. SIG. Move in. MSTR. And that link I threw in the chat, just scroll up there. This thing shows you the movers, and this gets updated. Well, this is pre-market. You have to click on the one that's not pre-market and look at the current screener. So what we got for today. All right. I'm just kind of sideways biased right now, waiting. There is a little bit of a bullish reversal pattern that has shown up in ES, but we can crush that very quickly. All right, this is a little 5-up, 3-wave retrace. If we can break out over this little high we made yesterday or the last couple of days right there, that's a positive sign. If we keep rolling on down, not so positive. So we can start crushing the setup here. All right. So right now, neutral. I'm not biased long or short right now today. I'm just kind of neutral, watching. All right, that doesn't mean there's not trades. I mean, look at Adobe; it's rocking today. If this can break above the roadmap line, continuation up to this high. All right, something else. You know, tech's being strong. Look at Apple, hanging out right below the breakout level. We break out over that 157 area, it's going to 199. But then other tech, like Amazon, hanging out down here in the consolidation zone. We get over that 100 price, probably going to rally right back up, retest this 112 area. Other tech, like Square, stuck in the roadmap line. AMD, which has been one I've been hyped up on, getting right to the 90 target. We break out over that. We're going to get a move up to 102-ish at the minimum, and more ideally would be my 107 area right up here where I got this alert set. We are breaking up above that resistance, so this one's a mover and a shaker the last few days. NVIDIA just consolidating, trying to break out. If we can get out of this 240 zone right here where we've been making highs, resistance, but it's inching up higher. Eventually this thing is going to pop. And it's probably going to hit right up in here in this 300 area. My ideal best, stretch goal 330. So these are the ones I'm watching right now. SMH fell short of the target so far, but a pop right up to this 254 is what I'm looking for right now. And it got the minimum target right there, just fell short of it. Didn't hit my alert, but it spiked up and then retraced. Working on the next leg higher on SMH. SMH has a bigger target, much bigger pattern for a longer term move up to 400. The AI revolution is based on these players like AMD, NVIDIA. SMH is a ETF that encompasses a bunch of them and some that aren't winners. So just keep that in mind. All right. Thanks for coming, everybody. Remember, hit the subscribe button, hit the bell thing, then pop up your phone calendar alarm thing and set an alarm for about 9:10 every morning. And you're like, oh, I got to go hit the YouTube channel for the Morning Monster. So I'll be back. Yeah. People might be chasing that cash flow. That's right, Goose. People might be chasing the cash flow into tech. So watch for tech to outperform here. Smaller list today because, well, stuff not moving as much. So yeah, happy Thursday all. Kimberly says in the chat, be safe out there. Come join us in Discord. We'll continue the conversation all day long, watching stuff that's moving. IWM, lastly here, not really making a big gap. Yesterday didn't fill that gap. Eventually it's going to come fill this gap that it made down, but doesn't look like today. So that's what I got. I'll see you tomorrow. Bye for now.